Are we in the midst of a housing market crash, or is this just simply a correction? And you may have been wondering, and you may want to know what the difference between the two even is. So if that's what you've been thinking, stay tuned to this video today as I kind of break all of that down for you and also give you some insights into who in the world or why in the world would you even consider buying or selling a home in today's housing market. Hi, this is Andrew with the Andrew Smith team in Frisco, Texas. And I'd like to start off just by saying, real estate markets are all local, right? So all the information you see on the news, the headlines that you read, they're talking about national numbers. And I'll share a few things from a national perspective today. But at the same point in time, understand that what happens here in Frisco is not going to be the same as what happens in Boise or Seattle, or Miami. It doesn't matter what the national numbers say. Everything is definitely local, and there's going to be differences throughout the country, although there are similar trends that we are going to be seeing throughout that do affect us all on a national level. And I was looking at YouTube in the last day or so, and there's just video after video after video, and it's doom and gloom and crash here and crash there, and it's like the next apocalypse is coming, and a lot of people comparing this to 2008. And the bottom line is a lot of those people making those videos weren't in the market in 2008. And so some of the information that they're sharing is not accurate. I did go through the market in 2008. And I can tell you there's so many different things that are not the same. And a few weeks ago, I made a video about why I didn't think the housing market was going to crash. And that video got a lot of comments. There's some people that agreed with me. There's some people that told me how off my rocker I was and that I just didn't know what I was talking about. And all of that is fine. But the honest truth is there are so many different variables at play right now that nobody knows for sure exactly what's going to happen. None of the economists expected that mortgage rates would rise as rapidly as they did in the past month. No one thought 7% was even possible, yet here we are. At the same point in time, you've got the impacts of Hurricane Ian. Look at all of the devastation, the things that are going on. I mean, my thoughts and prayers go out to the people affected by that. And that wasn't forecast. Look at how that will upend, obviously, the real estate market secondary at this point in time for their lives, but just the destruction that took place and what's going to happen economically in that area. So the point being is there's so many different things that can happen that impact what is going on overall that there's just no way to know. There's no way to forecast that entirely. But what I will say when we specifically get to the market is the housing market here is, are we in a crash? And it depends how you define it. When I did my video about a housing market crash, I didn't ever say that prices wouldn't come down. I didn't say that we wouldn't see a correction. I said I didn't expect the bottom to fall out of the housing market and there to be just an unbelievable free fall like we saw in 2007. And at that point in time, I was in Southern California, right near ground zero, one of the ground zeros, you could say, of where all this took place. And I can tell you that conditions now are nothing like they were back then. And we are going to see a correction. The market got way too overheated. It was going up and up and up, and it was not sustainable. Everybody knew it wasn't sustainable. And so again, does that mean it has to crash, right, per se? So what I can tell you, I'm going to start off here by, let's take a look at what Mark Fleming has to say about this. And Mark is the chief economist with First American. And here's what Mark says. While mortgage rates are expected to continue to drift higher over the coming months, much of the rapid rise in rates is likely behind us. Nationally, while month-over-month house prices may decline, annual house price declines are not expected given the ongoing supply and demand imbalance and continued strength in the labor market. So again, let's unpack that for just a second. So talking about the supply and demand imbalance and talking about month over month price declines, but not year over year. Hence, what I see the difference between a correction and a crash. In the crash that happened before, prices went back to where they were the year previously and then kept going down. So let's look at it here. So specific to Frisco, our prices peaked in April of 2022. And guess what? We saw month over month price declines in May, June, July, and August. So we did absolutely see prices come down. But guess what? We actually saw prices tick back up again in September. Now, 1 month doesn't make a trend by any means, but is it an indication? Is it an early sign that at least in our market here in Frisco, we're starting to see some balance? We're starting to see maybe a sense of normality coming back in. Now, granted, we are still a market with a lot of inbound migration. There are still all kinds of people moving here, which is propping up our demand. Overall, as mortgage rates rose, we absolutely saw buyer demand drop off. That seems to be expected. I mean, it's common sense, really. I mean, homes just as mortgage rates went up got really, really expensive, and an adjustment needs to be made or needed to be made, and we saw that. But there are some people that are not necessarily directly impacted by the rising mortgage rates. Yes, they don't want to do it, but it's not necessarily a case where they can or they cannot buy. And I'll explain that more in just a second. What the latest data is showing us is that 5.5% appears to be a threshold in the mortgage rate. And this is looking at it nationally. Once rates went above 5.5% and stayed there, then we did see a downturn in demand. We started to see the buyers definitely pull back. That may be one of the reasons why, well, it is one of the reasons why here in Frisco, at least, new construction is still selling strong. There's a lot of new construction in this area, and every single builder is offering incentives to lower the mortgage rate. They are doing something called an interest rate buy down. They're buying the mortgage rate down. So there's builders right now offering 4.99% 30-year fixed rate loans. And there are plenty of buyers that are jumping in on that to take advantage of that lower cost financing from what the prevailing rate is right now. And so the other thing I want to point out is that one of the challenges that we have in the market right now is that it's seasonal, right? So it's normal to see home prices decline and inventory to go up in April, May, and June, or I'm sorry, not April, May, and June, in October, November, December, as we head into the fourth quarter. So, I watched a video yesterday. It was talking about, home prices decline and inventory is ticking up. But the market they were talking about, the amount of those changes were in line with seasonal adjustments that we see in 2019, 18, 17, 16. So it's backing out the seasonal numbers or the seasonal changes in the market and saying, okay, what's the current market doing, excluding those seasonal dynamics? And that's a challenge that not all people are taking into consideration. So let's go back again. Why is this a little bit different? And I don't see a crash like we did before. Well, as explained, buyer demand is down. But as Mark mentioned just a couple minutes ago, or as I said that Mark had mentioned, there's still an imbalance between supply and demand. And what does that mean? Well, even though demand has come back, we have to understand right now that sellers don't have to sell. And we're seeing that here in Frisco. We're still seeing inventory decline. We aren't seeing inventory tick up seasonally as we normally do. Inventory is still going down. In addition, you've got approximately 62% of all of the homes listed currently have taken a price reduction. So there are plenty of, that indicates that the market's still correcting. By the way, it indicates that where buyers want the prices to be and where sellers are not lining up. So you're still seeing quite a heavy amount of price declines taking place. Not as many as we did see. And as I mentioned, the new listings coming on have already, those people that really do want to sell, they've already adjusted their price when they listed the property originally. But When you look at the fact that, back in 2007 and 8, you could take out a mortgage for 125% of the home's value. So you had a home that was worth, you know, $500,000, right? You could actually borrow 25% more than that. I mean, sounds ridiculous when you think about it now, but that's what was happening. So people were using their homes like ATM machines. They were cashing out continually, which meant any adjustments in the economy, any adjustments anywhere whatsoever, and all of these people were rapidly upside down on their mortgage. They didn't have a choice. There was no other option for them. In addition to that, new mortgages that you took out had something called negative amortization. You could actually make your monthly mortgage payment, but the monthly mortgage payment you were required to make, almost a little bit like a minimum monthly payment on a credit card. You're not paying anything in essence. So your balance continues to go up. That's the way mortgages were. You could make a minimum payment and your balance actually went up because that payment didn't even cover the interest that was owed on the loan. None of that exists. The loan to value is substantially different nowadays than it was then. So what you're seeing here, for sellers that don't have to sell, why would they? They're simply just taking their homes off the market, which is why we're seeing inventory declines here in Frisco and in some other areas as well. They're just like, no, thanks. I'm just going to wait. I'm locked in at right around 3%, and I have an absolute boatload of equity. So I don't need to do anything. So that begs the question of, well, what about the economy? What about when we go into a deeper recession? What about when job losses start to occur? And again, that's going to affect different areas of the country differently. But let me read you this from Selma Happ, who is the interim lead of the Office of the Chief Economist. That's a mouthful, for CoreLogic. Well, here's what Selma has to say. For many households, home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan-to-value ratios will provide many owners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demand, particularly if households are relocating to more affordable areas. So again, let's break that down just quickly here. It just basically, people are sitting on a lot of equity. If you're moving from California to here in North Texas, you're probably going to be selling a home in a higher value market than what you're going to be buying in. You can use that equity to purchase in. That's the relocation buyers, and have a fairly low mortgage if you have a mortgage at all, in which case you're not impacted by the mortgage rates. On the flip side, if someone was to lose their job going forward and the house becomes unaffordable, chances are, when you consider the equity gains that have been made over the last few years, they're going to be able to sell the home comfortably and put money in their pocket. So let me explain. In many cases here in the US, people are sitting on record amounts of equity. It's the highest it's ever been. So let's say someone could have sold their home for $750 4 or 5 months ago, and now they can only sell their home for $625, $600. It's like, well, we lost all that money. Not really. You didn't have all that money. It was on paper only. But if you only owe $300 on the house and you're still going to pocket $300,000, are you really in financial difficulty? And that's the big difference. I'm not saying it's not going to sting. I'm not saying that from a timing perspective, it would have been nice to sell it months ago, but that wasn't the case. Remember those mortgages I was telling you about in 2007 and 8 when the market crashed? People had no choice. All of a sudden, they owed $750 and the house was worth $600. They were underwater. They had no options whatsoever. Hence all the distressed properties that came on the market. And that's not going to happen now. So that begs the question, if you're in the market, should you buy? Should you sell? And the answer to that is going to be different for everyone. Right now, if you're renting a property and you're locked in on a lease at a good rate, you probably are better off just sitting out, just staying put, staying where you are and letting this play out over the next several months. But if you've got a lease coming up for renewal, that could be a different story. I've had a lot of conversations with people in the past couple of weeks that were planning on continuing to rent, only to find out that at the end of their lease, their landlord was raising their rent $400, $500, $600, $700 a month. At that point, it didn't make any sense. The amount that they were paying was exorbitant for the property that they lived in. They would be much better off taking advantage of one of the builder incentives on a lower rate, or getting into a home where the seller has to sell, has brought the price down, knowing that they can refinance in 12 to 24 months and whenever mortgage rates come back down, which they are expected to do. On the flip side, if you own a home currently, why would you sell and buy something else? And the answer is you only would if there's a compelling reason that you have to move, or that home you've had your eye on forever, that perfect home suddenly becomes available. And it's like, that's what you and your family have always wanted. You can sell, use the equity that you have, put enough money down to where it makes sense. The mortgage is affordable, knowing again that you're more than likely going to be able to refinance out of the rate that you've got currently, or you would be getting currently, into a lower rate in the next couple of years. Or maybe even consider an adjustable rate mortgage. 7-1 ARMs, where the interest rate is fixed at a lower rate for the first 7 years, are becoming very, very popular right now, with the expectation that you're going to be able to refinance before that 7-year period is up. So again, those are just my thoughts, based on the latest data that I have on what's going to happen. And again, who knows, right? Nobody knows for certain, but that's what's going on right now. And if you want to stay up to date, I've got 2 things for you. Number 1, subscribe to my channel. Give me a thumbs up, hit the bell notification, or hit the bell icon so that you're going to be notified anytime I post a new video. I put these out each and every week with the absolute latest economic data and what the numbers are telling us, so that you can stay up to date. And secondly is the market report, where I'm quoting the stats for Frisco. I have that market report available. There's a link to it in the description below. Even though that link is for the Frisco report, from that report, you can search any city or zip code in the entire country. You can subscribe and have that information delivered right to your inbox each and every week to stay up to date on the latest trends in your marketplace. Hopefully that helps. If you have any questions whatsoever, please feel free. You can click the link below and schedule a call with me, or go ahead and shoot me an email at contact@theandrewsmithteam.com.